A Bain Company report estimates that 2024 will be the first year-over-year decline in luxury sales since the 2008 financial crisis. That excludes the COVID-19 pandemic. Our next guest thinks those losses could continue into 2025. Pauline Brown is with us, former LVMH chair of North America. Pauline, always great to see you here.
Great to see you too.
Is it a matter of some of the issues of this year just continuing into next year? What has been sort of the biggest stumbling block for luxury in 2024?
Well, the biggest stumbling block that has been admitted to is the slowdown in China, and that is not going to turn around. In fact, I don't think in my lifetime we will ever see another China again when it comes to luxury goods in terms of the size and the growth that that market has enjoyed over the last 15 years, and that party's over. But the issues within the sector go much deeper than China, and I think some of them are not being talked about enough. Number one, and I've talked about this on your show in the past, the price hikes. If you look at most of the brands, and I would say most dramatically seen with Chanel, but also with certain items from Prada, from Dior, from many of the big nameplates, the price on their handbags and their shoes has gone up anywhere from 75 to 100% on the same items just in the last 5 years. And that was not inflation driven. So I think they've gotten to a point where even among ultra wealthy people, the value proposition has dissipated. I think the second issue is with those price hikes, while many of these products are still, quite elegant to look at and nicely made, the quality has not improved dramatically. In some cases, and most notably with what we saw last summer with Dior, there are questions on whether the quality is even ever what we thought it was. It was discovered that there was a sweatshop in Italy that had been making some of their bags at $57 a bag. And these are bags that go for many, many thousands of dollars. So I think they have a quality problem as well.
And I imagine the quality and price problem equals brand problem. Where does that leave the value proposition of some of these brands as we head into next year? And what do they need to do to kind of reshore that branding?
Yeah, it's very much a brand problem. Now, I should say there are a few, and I could count them on probably 1 to 2 hands, but there are a few players that do not have a brand problem. And that is why I know that the issues run deeper than China. Hermes continued in the last quarter to grow by double digit in a down year. Brunello Cucinelli, which I felt always was very excessively priced, but still it has been consistent and fair and very tight in its distribution and in its production processes. They grew close to 10%. And then on the sort of more accessible side of the market, Ralph Lauren. Ralph Lauren had a great quarter, growing by up to close to 5%. And this is a company, in the case of Ralph, that extends much, much broader than the first two I mentioned. Most of the names that we talk about in luxury, though, are not in such a fortunate position. I think what they're going to have to do, number one, they're going to have to brace for continued deceleration. I think they're going to have to start to right-size some of the distribution. I think they're going to have to pull back investments, which they've already done in markets like China that are saturated and that are also looking less favorably at these kind of investments and spending by consumers. I think they're going to have to invest in quality over quantity, and in the process, again, they may have to contract some of their sales in certain markets. But if they're in it for the long term, which the luxury players all like to say they are, then these are just going to be necessary yet painful moves.
And Pauline, the dollars that are not going into the brands that have not been offering the quality, or at least not the quality for price, where is that going? Where are those dollars going? Are they going into the Hermes and Bruno Cucinellis? Are they going to smaller upstart brands that are more exciting to people? Or are they going to travel, for example?
Yeah. I think the latter is the biggest beneficiary here. In general, and we've seen this trend for the last few decades, and Gen Z and millennials are particularly prone to spend more on experiences and on entertainment than they are on stuff. So, and I don't think that's changing. It changed for a while during COVID simply because people couldn't spend on experiences. They couldn't travel. They couldn't go to restaurants. They couldn't go to concerts. And now, as we see from some of the more popular entertainers like Taylor Swift, they are spending unlimited amounts. Broadway tickets are, in many cases, higher than ever. Restaurants, the best restaurants, are hard to get bookings in. So, And on top of that, the cost of travel and dining out has gotten quite a bit higher. If you look at the average luxury hotel room rate, it too is in some cases twice what it would have been pre-COVID. So not only are they more inclined to spend on travel, but per night away, they are actually having to spend more, and yet they're doing it. The occupancy rates of many of the more popular hotels is pretty low.
How can luxury brands capitalize off that? It makes me think about the Soho House success and the offer to take it private, the shares of that company surging after that. Can luxury brands capitalize off of these kind of third spaces that Gen Z knows and loves and is looking for?
Yeah. They're certainly trying. Louis Vuitton brand is going to be opening a hotel in Paris, its first ever name brand hotel. Not the first for the group, LVMH, but the first under the Vuitton brand. Already here in New York, if you go into the flagship store on 57th Street, which is right now a temporary location, there is a chocolate making little bakery, if you call it that, at the top floor. Tiffany has a Daniel Boulud restaurant in its shop. These do help when well executed to draw people in. They don't always, though, help to actually convert to sales of where many of these companies make all their money, which is in accessories. And so I think the challenge is not just going into hospitality, but doing it in a way that actually fits within the brand, that doesn't just bring in tourists who are interested in marveling at the art in the walls, but who are actually ready to spend in more substantial ways.
Pauline, I wanted to also ask you about the resale market, because in our morning meeting this morning, the Gen Zers on the team informed me that there is a trend of people looking for older vintages of some of these high-end items because they are seen as better made than the newer vintages, if you will. How widespread is that trend, and how lasting do you think?
First of all, it's not a new trend, meaning there's always been vintage stores, secondary outlets, and so forth. It was a very fragmented market prior to RealReal and a number of the others that have been able to create online marketplaces and pool the business in a much more efficient way. RealReal is actually having a very nice turnaround. In their last quarter, they had a big uptick, 11% growth. While still unprofitable, it was less unprofitable than it's been in the past. So I think that the trend line is very much moving in the right direction, and not just because of younger generations feeling that the quality is there. I think it also is the sustainability aspect, or the perceived sustainability of buying something rather than buying something that's newly made out of a factory. And there's also some appeal, there's some design appeal to things that are a bit retro and not just available in any upscale department store or monobrand store that I walk into. So I think there are a lot of tailwinds behind companies like the RealReal. They're hard to get right economically. And as we've seen with RealReal, the stock has been very fragile. I'm not sure it will function that well as a public company, but I think for the industry at large, this is one of many, many challenges that they are continuing to contend with.
Really interesting overview, Pauline. Thanks so much for joining us this morning.
Thank you. Thank you. Happy holidays.
You too.